over 1,000 companies reporting earnings this week, there's bound to be some hot stocks in there. I've pulled out 5 of the hot charts that you should be watching this week, including one company that is the hottest S&P 500 stock over the last 30 years. $10,000 invested in this company in its 1995 IPO would have yielded you $29 million at the end of 2020. That's a lottery stock if I've never heard one, but it's still hot. What is it? Let's dive right in and see. The first stock out of the gate is not the hottest stock of the last 30 years, but it's been on fire. Dominos, ticker DPZ, one of my favorites of the restaurant stocks. I call it a beast because it's still doing double-digit comps, and it's been a pandemic winner. Now, it is coming off a rare miss last quarter, and shares have kind of stalled out because this is one of those where, everyone thinks once the economy reopens and we can go to restaurants again, why am I ordering the Domino's? Except they've been asking that for the last several years, as you can see on this chart, as the shares have more than doubled during that time. So, Domino's has really been executing well, both with its app and its product line. And pizza is still a growing area. It's really dominated in most markets by local pizza chains and not these national ones. Domino's, again, also international, and so they're really well known globally. But shares are trading at 29 times here, not altogether expensive in this type of market and for the type of comps that they're doing. But Domino's a little bit out of favor here, so we'll see what happens on this earnings report. Then a hot stock for the pandemic, DraftKings, ticker DKNG. It's missed 3 times in a row, but nobody cares, right? Because it's DraftKings. Shares are up 242% in the last year, but looks like maybe they've stalled out a little bit here. So this earnings report could be a catalyst to push these shares higher, or maybe not. So we will see. But DraftKings is one of the hot Wall Street Bets Reddit stocks, and everybody's going to be watching it. Then switching over to Salesforce. This has also been a big winner during the pandemic. It's got a great earnings track record, no misses since 2017. Looks like we have a few quarters of just missing data there in 2016, but you can see a little bitty green arrow there at the end. So there were reports, but Salesforce, it's just very consistent, but it's put together 2 big beats in a row. Those are the 2 big green arrows, and pulled back a little bit off of the recent highs. Shares are up 27% over the last year, so a little more subdued type of rally, but this is definitely one to watch on the reopen. And now, finally, we're getting to the company that is the best performing of the S&P 500 big cap stocks over the last 30 years. Monster Beverage, MNST. Yes, it beats out Amazon, who comes in number 2 on that list. But Monster Beverage, an annualized return since its 1995 IPO of 37%. That's how you get rich, right? 37%. Now, what's it been doing lately? It has busted out here to another 5-year high. And it's got a good earnings surprise track record with just that one miss since 2018. So, yeah, it's still chugging along. Now, over the last year, shares are up another 31%. That might sound a little paltry compared to some of these others that I'm talking about, like DraftKings with 240% return. But again, you do 31% a year every year over the course of several decades, and it's a good result. So this is one a lot of people are going to be watching. A lot of people are in it, and it has been executing. Then we're going to switch over to Shake Shack. SHAK is the ticker. Now, many of you who follow me on StockTwits or Twitter know I'm not a fan of Shake Shack as a stock. I like the actual company and its product, and I do partake of Shake Shack. So I like that aspect of it, but their growth is mostly coming from opening up new Shake Shacks and not from growing the comps at the old ones, unlike Domino's. Domino's is growing double-digit comps at its oldest stores. Shake Shack does not. It's not even the low single digits at its oldest stores. So that's my issue with Shake Shack, that it's not really growing in the same way most restaurant chains is the growth you want to see with them. But it has this great earnings surprise record. Only that one miss during the pandemic and then a big beat last quarter. Shares have really taken off here. They're up 60% in just the last 1 year, and they now trade at, are you ready, 690 times earnings. So is all the good news priced in here, or will Shake Shack, which has a lot of dine-in capacity, will it be one of the bigger winners coming out of the reopen as we head back inside into the restaurants themselves? That's all up for grabs here. So this is going to be a big earnings report for Shake Shack, so you're going to want to be tuning in. So as you can see, there's a lot of hot stocks that are reporting this week and more to come next week. So be sure to subscribe to get all of our Earnings All-Stars videos at zacks.com/YouTube. You can also follow me on Twitter or StockTwits at my name, at Tracy Reineck, to get tons more earnings charts. I post a lot that I don't do on the videos, so you can see them all there, and you can get these video links there as well. But be sure to get our earnings charts somewhere, and I'll see you again next week with some more earnings.